Hello and welcome to our reporting season spotlight, your shortcut to the results that matter. I'm Juliette Sarli. NextDC's first half result has come in line with expectations and has maintained its previous full year guidance. Contract and billing utilisation were both higher in the half, with the final capacity at S3 now in planning and large ongoing activity at both M2 and M3. NextDC also introducing a growth incentive plan for key management and senior executives around share price performance over a 5-year time horizon. Ampol has cut its full-year dividend to 65 cents per share for 2024 as the group recorded a slump in net profit to $122.5 million after grappling with weaker refining margins and maintenance work at its Lytton plant. These issues previously flagged to the market. Annual revenue totalling $34.9 billion compared with $37.75 billion a year earlier. CEO Matt Halliday expecting the challenging global refining and commodity conditions on top of disruption at Lytton to ease this calendar year. Shares are down 2.6%. oOh!media's full-year earnings hit almost $287 million on revenue of just under $636 million, statutory net PAT coming in at $37 million, the company embarking on a cost efficiency program in the wake of poor first half results, which it says led to momentum in the second half.
We have created a record share of all advertising in 2024, as we reported up to 15% of all media spend in SMI, and that's a really good vital sign that this structural shift is continuing. So we're the largest player in the sector, so we're going to benefit significantly from that broader macro environment.
Aussie Broadband has lifted its full-year guidance after posting first half revenue of $589 million, with underlying earnings hitting $65.8 million. It's paying a special fully franked dividend of 2.4 cents per share on top of an interim dividend of 1.6 cents. It's now expecting full-year earnings between $133 to $138 million and is talking up the Symbio acquisition, saying it's led to more diversification of earnings. NIB Holdings has cut its dividend as net profit after tax fell 22% on the year to just shy of $83 million. Revenue, though, rose 8%. NIB has reaffirmed its full-year 25 underlying operating profit guidance in the $235 to $250 million range, supported by an expected return to profitability for its New Zealand business. It's also expecting margins in the upper end of guidance and for policy growth holder in the second half. Lovisa's results came in softer than consensus, with comparable store sales decelerating towards the end of the first half. However, the company says sales in the first 7 weeks of the second half are tracking well, with total sales up nearly 13%. The store count at Lovisa slightly ahead of expectations. It had 943 stores at the end of the first half. No guidance provided, and the board has flagged it will assess dividends based on future profitability and cash flow. It is, though, paying out a 50-cent interim dividend. And the online retailer Kogan.com declaring an interim dividend of 7 cents per share. It also intends to resume a share buyback program. The company's sales and revenue up around 10% in the first half. Statutory net profit after tax rising 19%. Reece warning soft trading conditions in the US and Australia are set to continue in the second half as it posts a first half net profit just shy of $181 million, down 19%. Earnings also down to the tune of 9.7% on revenue of $4.4 billion. It will pay an interim dividend of 6.5 cents per share. Its US network increased to 261 stores as of the end of December.